Aloha and welcome back to the week that was. I'm your host, Colin Edsman, and this is your weekly market recap. If you were keeping track of the markets at all this week, you're not too surprised by the first part of this week's recap. We're ending the week with U.S. oil prices over $101 a barrel. The S&P 500 at a 232-day low, and the U.S. 10-year yield note at 4.44%. If the last 14 months have taught us anything, is that the next few hours or so over the weekend is really critical. The bond market must be contained, but we'll get into that a little bit more later on. There's also some great updates from some positive sides as well. We got Robinhood Social working really well. I'm learning and watching all of these great content creators, and they are teaching me a whole lot. Also, Robinhood Ventures Fund is on a straight up tear this week. Even though the week overall wasn't very good, Robinhood Ventures Fund finished the week somewhere above 28, 29. And we got as far as over $30 this week, which is great. I think a lot of that momentum might be pushed by the companies that are in there, and we'll talk about that a little later as well. Let's see. As always, I like to reiterate that there's a lot of opportunity in the market when the markets aren't doing well. So at this point, if you've been following along the last couple weeks, I've tried to do my best to inform you to pay attention and to watch, because there's a lot of news that affects the markets as a whole. Because of that news, you have to sort of keep your eyes, unfortunately, on a lot of posts, because like we saw last week Sunday, the futures just kind of popped off over a couple of de-escalation posts from Trump's Truth Social. So right now is not really a big technical analysis market. It's more of a let's watch the next tweet market, due to the fact that these are people who are talking to each other, and those people are kind of in charge of the way the world is going. Speaking of that, let's get into the peace talks for a second. So peace talks between the U.S. and Iran have, I don't know, stalled, honestly. Like, this weekend is going to show a lot, but there's not a whole lot of progress. There was a midweek pump that we got, and that sort of just kind of died off through the weekend. And like I said, we've kind of hit like the lowest we've seen in a long time. But really, we have to keep our eyes on the bond market, because that's what's going to be a big mover of the world global economy right now, because of how the yields function and the way that the jobs, the loss of jobs affect that as well. There's just a lot of things that need to be done over the next few hours. So hopefully they pump our bags on Sunday, but we'll be back in a couple of days after this episode. Check back Sunday live. We're going to be going over the futures and how they're moving as they open, because that can tell us a lot for the week. Sometimes we got a pump and then a dump, but let's get into some of the charts here, and we can see how the actual movement of prices went. All right, give me 1 second. All right. As you can see, thank you. As you can see here, this is the micro crude oil futures. It's still within this tradable range, right? Or range bound, excuse me. We got our high, we got our low, peak to trough, and we've tested this area we are at right now. So I expect that this is going to be probably another pullback down to this area down here, down at the 80, between 85 and 90 range. So Sunday, this will probably come down to here, and we will see the overall market get a rip over the weekend. So I'm expecting some de-escalation. expectations are everything, and wholeheartedly, honestly, this cannot sustain. For anybody who's not as deep into the markets as I am, this is not sustainable. And there's going to be some radical de-escalation. There's so many countries right now who are dealing with major energy crisis due to the fact that oil has gone up, liquid natural gas has gone up. Qatar also restricted their export of helium, and I'm not going to make it a science class, but helium is very important for multiple industries. But as far as energy crisis goes, there have been multiple countries who have had to close gas stations due to the fact there is no gas for them to give their people. And unfortunately, they weren't prepared in any way to have other energy stores brought in. So hopefully, we're going to see some of those talks happening over the weekend as well. Australia and Philippines is who I'm thinking of at the moment because that's what's been in the headlines. So let's zoom in a little bit here. It's going to come down to at least here. That's just the nature of the beast, right? So if we're going to follow this, it's going to pop down here, and then maybe we're going to get something unfortunate as far as the news goes, and we may see another 120 spike on the crude oil futures. That would be pretty bad. And I'm a pretty optimistic trader. I tend to just be on the right side of the market. I don't really have an emotional attachment to money, right? All of the things I invest are basically gone, right? That's how I think about it. Those are just gone. And if they're not gone at one point, I can utilize that capital. So I want to see what happens. I don't want it to affect the overall world crisis, but I'm intrigued to see what this weekend will bring as far as news goes. So I would expect if people are going to short this, either they're going to do it or did it today because it spiked right there at the end of the day and it'll probably drop down, or they will wait for something unfortunate and wait for an even bigger spike. Because of those violent spikes, natural tendency to retrace, that's why we used a retracement here. That's kind of a good indication that you can kind of short it at a top, right? At a top of some sort. Okay, let's look at the VIX. Poof. Okay. So the VIX ended on a week high, right? These are days. So this is the highest it ended on the week, and a 30 on the VIX is not great. And also, we've been sustaining a pretty high area here. Look at this. This is too much. This is far too much volatility. Now, if you're an options trader and if you're short, you're doing really, really well right now. And I'm working on my optimism because sometimes I want it to go up, and want and hope are pretty close together. So as far as the overall VIX goes, this is a strong uptrend. I want to okay. Un momento. I'm going to clear some of this up so I can draw you guys some better lines. Okay. These were just some areas of interest for me, but rather than having to explain it, I may have to take a phone call in a moment, so I may have to transition you back to my live interlude coming soon. Give me a moment. I still help manage an elderly grandfather, so sometimes those emergency calls come in, so forgive me if one does. Okay, here we go. Much better. I'm also going to get rid of this here. Okay, perfecto. Nice and clean. Okay, so let's look at the VIX here. So as you can see, this is the lowest we've had in a while. So this was December 24th, 2025, and we've been on nothing but an upward trend since then. So if we were to just kind of draw a basic line, we're going to use white. Let's do our best to stay as even and neutral. And colors will dictate your psyche, so be careful. Sometimes you don't know it, but you're just being manipulated by the color of something. You have to work on the fact that red and green is not necessarily a good or bad thing either way, because if you're on the right side, red is good. If you're on the wrong side, green is bad, right? Sometimes that's how it goes. But here's the line we're going to draw. Oop. Let's make it a little bit longer. Come on now. Help a brother out. Oi. Hey, Mr. Line. Can I click you? Okay. Just going to draw a second one. All right. We'll go from here. So the VIX overall has basically had this overall average, right? It seems to kind of be about here from that overall high, and then maybe we'll just bring it down to, that looks a little bit better, right? So it's obviously left its range here, and it's hit 30 a few times, and then it got to 35 right here on March 9th. And due to that overall spike, we got a major retraction, and now we're still trading within this range here. Now you want to work. Okay, perfecto. Here. We will extend you a bit. So as far as this overall shape goes, what that tells me is there's a decent range of possibility, right? Because now our range is getting bigger. We'd prefer it not to be so wide, but if we were to average out, maybe it's not so wide, right? Maybe that feels a little bit better. Okay, because then now we got a couple of places that it stayed and then left, right? So it's kind of bouncing along this line. Left it, came back, tested it. Okay, perfect. Here we go. I like this better. So this is the overall trend channel that we're seeing. And so since this is the recent high and it tends to come back off the high, it's most likely to do so. It doesn't tend to just, well, So if we look at this particular day, it did not necessarily retrace the next day. It tried to go and then ran up, right? This is this, I suspect, March 9th. That was the start of this overall crisis. So here's the major spike, right? And that's when the oil prices spiked to 120, right? So these have a decent correlation. And now that we're seeing that the crude oil prices are actually affecting the market, we have to keep an eye more on this for a while. And not only for life purposes, but now we have to now we have to look at crude oil as an overall market mover. And that's not fun right now, right? Because that's just becoming really obvious. There is a major bottleneck in our overall oil supply and our energy. There's just, things are just bottlenecking, and we can see that a small area of conflict can affect the entire planet. The planet is a big place. And one commodity is moving the entire thing. And then that's trickling down through other energy commodities. Now, Obi would say that there's always a bull market somewhere. And if you're watching the headlines and you're in these areas that are going up, if you're in energy right now, you're doing great. Next decade, it went from $6 to, where do we end the week? $8.30, maybe a little bit higher. We have Venture Global, VG, ticker VG, is finished the week at 17 something, 1760. And it started the overall crisis somewhere below 10. How insane is that? So what I did is I tend to, because these positions and these companies are smaller, they're kind of small cap, micro cap area, right? As you can tell from the overall stock price. And they trade violently, and this is kind of a volatile time. So as soon as they get to my personal price target, I take the profit difference that I'm shooting for, and I close that position and I turn that profit into a leap. That's been my goal now. Because then now that leap option will give me the same amount of exposure of that 100 shares or 200 shares or whatever it is that I'm liquidating. But then those profits that were made in holding that position is now just turned into that same position but smaller. So now I just regained my original capital back, which is a great thing to try to do because now you're in the game for free, if that makes sense, right? And you got that free profit turned into the same amount of market movement or position movement, which I love because then I can still go back and be nimble and be agile. My trading style is sort of thematic and momentum based. I will, at least for my personal alpha portfolio, which we're in right now, it's all about how we move as from short term to long term, because I'm trying to make an income and a profit on a short term. Now, in a long term, I have those portfolios held and set up to just grow. So you just set it and forget it. My Robinhood Strategies portfolio is doing better than the overall market, and that's all I'm shooting for because that portfolio is for the long term, for the emergency fund, for the great days 10, 15 years from now. That's what that's for. What I do swing wise, trade day to day or week to week, is I try to pay my bills, right? That's it. I set a goal. These are the bills that I made. These are the bills that I want to pay off, right? Because that's what matters to me personally. I can't change how the world functions. I can't change how markets get manipulated. As if you guys are in this for real, you know that markets do get manipulated, small or big, good or bad, right? It's just the size of the overall money that goes into that particular market. So it can just be swung, right? So if there's overall influx of capital into that particular sector, you're going to get a manipulation, not by accident or not on purpose. This isn't necessarily inside trading. This is just how markets function. They go up, they go down. People have their price targets. People have their buy and sell areas. So that's just how markets move. So if you can read these charts and you can sort of pick up how these markets move, trade what you know, stick to what you know, right? If your investing becomes boring, you've gotten a good tract of or a good plan and a good system working for you. For me, it's sort of boring a lot of the time. So sometimes I tend to fidget more than I need to, which is my own shortcoming, which I'm working on, right? We all tend to be like, I'm just making money and it's boring. That's okay. People want me to make money and it's boring. But for me, this is an art. This is a study. I enjoy how these markets move the overall well-being of the human race, right? To put it simply, like if you can manage how you look at these overall global markets, you can kind of see how humans are doing and where they're doing well and where they're not doing well, and then you can kind of anticipate where new innovations will show up, right? If there are power vacuums, there are opportunities. All right, so let's see how the SPY closed for the week. Now we're going to see we're going to check out the charts here on the SPY because this is the ones I tend to draw a lot on. While this is loading, I don't know if you guys caught the news this week about Celsius. No partnership. I just drink it because it works the fastest. But Celsius this week took a bit of a downturn because of Costco. So let's see. So what is CEO? Probably S. All right, let's take a look at Celsius real fast. Just because this is more interesting and not so morose as far as the market goes. Okay, here we go. Let's drop it down to about a week's worth of days. Give me a shorter candle span. Here we go. Okay. So somewhere, I think, where is it? Shorter. Where's the, here we go. So as you can see, Celsius is trading below all of its moving averages. Unfortunately, it tried to hit its, this is probably the 20. Yeah. And it started to trickle down from there. Here is the more interesting part. So if you guys don't already know, Costco, being the straight up consumer goods predator that they are, they unveiled a sparkling energy drink just like Celsius. Oh man, how funny is that? So, and you can tell here on the chart that Celsius's moat is a bit small. Look at this. Look at this. This is not. If people weren't afraid that Celsius is now have a smaller market cap because of Costco, this is a good indicator that that's not true. Because Costco will find, if your product is overpriced and there is an opportunity for Costco to bring down those prices, they're going to make their own product. We, as a family, buy Celsius from multiple places depending on the price. They've gotten expensive, but because of the honestly, it's good. It's fast. It's not as it doesn't give me the jitters like Red Bull, but it's got a bit of a pick me up after about a quarter of the can. But since they were overpriced and Costco actually sells Celsius too, they got to check the data, right? So whenever you sell a good, you can kind of see how much of those goods are being sold, right? You're a store. So they saw how much volume was being moved of Celsius, and they're like, well, our turn. So I don't know who Kirkland partnered with. That I have to do some more research on. Maybe I'll come up with that within the next couple of weeks. Maybe. But Kirkland doesn't tend to make their own product, right? They tend to partner with whoever their competitor is and make an almost as good product with a great margin. Because my guess is that Celsius didn't want to bring their prices down for Costco to bring more of their volume in, because that's usually how Costco does it. They're like, okay, we want this much of your product, we want it for this price, and if you don't give us that price, we will basically make our own and chop you down at the knees. And that's what they did. So I'm assuming some kind of background talks went sour and Celsius took it to the kneecap. All right, here, back to the SPY. Congratulations if you're shorting Celsius. Sorry to any Celsius holders. But Celsius is a decent company. I think they've got a ability to make their way back out of this. All right, so I'm going to stretch this out to the day. We're going to look over the charts I drew on the SPY. So if you're keeping track from last week, right, these are the drawings that I've gotten. This is on the actual SPY. They're slightly different than the... Actually, let's do that. I think the drawing's a little bit better. But this still conveys my point. Doesn't really matter too much. But I think it'll be better here. Perfecto. Okay, so as you can see, this box that we drew, it just got into it, right? And we suspected that would happen. If we go to our previous indicator, like I like to use, is the Kalshi markets. These traders know what they're doing. They have been wrong 0 of the time. And they're currently having their very first conference right now. And congratulations to Kalshi Research and their very first conference and all of the people there. The founders and the traders, they're really changing the markets. There's also some great news coming out for us as institutional traders. Kalshi is going to start introducing margin into their markets. Margin is a dangerous thing. If you don't know what the heck you're doing, do not f with it. Period. It'll wipe you out. Don't say I didn't warn you. All right, back to the case at hand. Here we go. So now look at the projections again. So from last week, we've gotten there. Boom. It was a 92% chance to hit here. So now we've definitely got a 96% chance to hit under 6,300, right? The momentum is not in our favor, right? And these, I look at them and I'm like, why fade it, right? My friends are right. And they were right today. So coming Monday, we're most likely going to get some news over the weekend and some sort of pump. But I'm going to start allocating some asymmetric positions towards these high possibilities, right? So at least this is my next price target on the S&P 500, 6,300. Okay, so there are a couple of ways to hedge your overall portfolio, because if you're trading on US markets at all, the S&P 500 matters to your entire portfolio, a little bit even, but it matters. There is not really anything that out there that is completely immune to its overall movement, so we're going to keep our eyes on this here. So since it already kind of broke that, we drew this line last week, it's in this box now. And it's, as you can tell, we're pricing in those ranges that I drew here. Boom, boom, and boom. These are high possibilities, which is not fun, right? But it's not a unheard of level of movement. As you can see here, it fell down pretty far at one point. I'm going to try to draw this without completely breaking the screen and making everybody confused. Okay, peak to trough. We are exactly in that range right here. We'll just kind of, oh well, actually let's pull this way. Here we go, because there's the top. Right, so you can see here, it tested, this is where it broke, came back, tested it again, right? Because of this being such a large index, or large indicator, well, it's both. This is a large index. If you don't know what the S&P 500 is and you're just tuning in to knowing about the stock market, the S&P 500 is 500 of America's top performing companies in one big basket, right? Easter's coming, right? So imagine all of those are eggs of varying sizes. And if we think of weight, each egg has a different weight to it, right? So if you have 500 eggs in a basket and some of those eggs are heavier, like one big egg would be NVIDIA, for instance, then that overall weight of that egg being moved will move the basket more or less, right? So now we're seeing those eggs in different areas of the basket start to get bigger and bigger, right? They grow and shrink. So because of that, now the basket is being moved around more by other markets, by other sectors, because they're made up of a big group of our best companies. They touch everything: farming, energy, technology, finance. They're all in there, right? So if one is doing bad, they shrink, and the overall where that money goes grows, right? And you're holding a basket and you're trying to balance this basket around. So as you can see, this basket is moved by large amounts of volume. So this is a great way to see how things move as a big group, right? So this entire group is now cut in half, and most of that is now energy, right? And then the other half is things that are materials, right? Things you can touch, you can use, right? The things that are moved by the energy are now being affected because of how much it costs to run the overall S&P 500 of companies. If that sort of makes sense. If it doesn't, leave me a comment later on, and I will go into detail a little bit more in a different pod. We'll do a deep dive on top of that thing, on that subject. All right, we're going to remove this real fast, just so it's a little bit more easy to see. Okay. So rather than fade the market, my goal for the next coming week will be to watch these areas, right? We're going to get a pump, most likely, right? Since we popped back off, we can kind of see that the size of the overall movement, right? So we can retrace it just in a small place, right? This is the high. This is the low, where we're getting inside of that kind of critical area. Now, we need, like I said earlier, the bond markets need to be fixed radically. So if we're going to end up anywhere below this area right now, it's going to be soon and swiftly. Because you can see it was a pretty steady grind up, then a grind sideways, then a pop down, right? This is kind of the same level of violence, and we've broken through that last time that we tested this, right? And this is such a curved progression. What it tells me is the market is actively fighting it on equal amounts, trying to get it out of here, right? Because these are very strategic looking lines, right? They kind of just almost look the same. They have a pretty decent range to it. They're like, okay, they're range bound within this shape that we drew, right? And now if we make an adjustment to this shape, let's say here, we'll just elongate it. How's that? It's going to stay within this box. And if it doesn't, and if it does come back inside of it, dang. Okay, we're going to call that a breakout, right? Because the overall trend seems to be roughly here, right? So it kind of broke out of here. And it's going to retrace back into this space here. So I'm assuming it's going to test this most recent low, other than the one we're at, that we're currently trying to stay out of. Drowning in, excuse me. But yeah, also trying to stay out of. Test, break, test, couldn't. It tried. There was another tweet earlier in the week that were ceasefire, but the ceasefire was to put more troops on the ground, not to actually de-escalate anything. So I'm like, bruh. But on a tinfoil hat standpoint, I'm also seeing some news or some information that correlates to the last time we were sort of in this predicament as far as market, I want to say not collapse, but so here, let's look at right here, okay? If you can see the bottom of the screen, that date is April 4th of last year, almost a year from today, or almost a year ago today, which is really interesting. And I've also been studying Trump's, this is by TKL, if you don't already follow them on Twitter and Facebook and literally anything. They are the fastest, most even-keeled, detailed news to come out every 5, 10, 15 minutes. Follow them if you want to stay tuned. But they have got their 9 to 10 step plan on how Trump handles crisis. This right here is exactly a year ago. And if we get some major de-escalation talks about this area and then a pump back, that would be almost improbably impossible. Like almost when like it's almost coming down to clockwork. And if it comes down to clockwork like this, like a lot of my trading has been sort of kind of keeping a tertiary eye on the clockwork, but also trying to just be a contrarian to it because I don't want to necessarily believe that kind of clockwork exists, but I think it does. So this is going to be an interesting time, maybe anthropologically. I don't know how to necessarily term this, but if the overall biggest market on the planet can be moved on a almost yearly, or not yearly, but like a yearly basis, to go up and come down and then go up, then over the next, or over the rest of the Trump's term, we might be able to just follow this again, right? If you know their 10-step plan from TKL, they are pretty good. They've gotten it, I think. And maybe Iran doesn't want to come to the table about talking about it. And maybe they see this plan and they're trying to like not let Trump basically control the global economy in a sense. They could radically fight back. And not with less what's the sense of using a less explicit term? Iran and the Strait of Hormuz has sort of got the world by the cojones, and that's a bit unfortunate to see. So this weekend there's going to be a lot of news coming in, most likely because of how the bond markets, like I said, are doing. They're getting too high. The housing interest rate could be 7% or more in the next couple of weeks, which is extremely high. One of the overall goals of this administration was to bring more housing, bring more affordability, bring down costs. This war or conflict, whatever, semantics, doesn't achieve any of those three things, and that's big. So this is going to get some radical readjustment really quickly because it literally has to. But we don't know. We don't necessarily know. These are all high-level speculations. Because the Kalshi traders don't necessarily believe any of that, as we can tell. Because if it does get to this area, now this is the year. Like, we could see another overall rundown, downtrend sometime later. This overall projection may not be for this particular conflict. We don't know how this trickles down towards the rest of the markets yet. So it's important that we keep our eyes open. But there's some other stuff we have to look at real fast. Because it's not only the financial part of this overall conflict. It also comes down to the psychological strain that we as humans feel. Like, I can't just ignore that people are in pain. I sort of sometimes feel a bit like I'm in a perch, like a hawk, just kind of watching how the overall world functions and waiting. And it's not fun to watch from up there, but that's just how I see the economy and the global markets. It's a measure on human ingenuity, human emotion, human pain. And I don't want that for anybody. Like, the news is one thing, but the news is confirming a lot of things that people feel. On a local standpoint, our gas got to as high as $6 a gallon for regular, $8 for diesel, which is important for a lot of the trucks that move goods along the island. and as well as moving goods inter-island, right? So we're going to see our prices going up from that standpoint. Also, it affects our day-to-day travel. I have the luxury and blessing of being able to trade from home. I'm technically unemployed, but not all unemployed people are broke. And sometimes I feel like I'm outside the world. I don't necessarily always hear the same issues like I used to as a hairstylist, because I was in there, in the trenches, listening and feeling the problems of people. And I still hear those problems, and I want it to change. So my goal is always to bring the best information that I can to you guys, so you can make the best decision for your life in the moment. We know that things come to a conclusion, but time sometimes is something that people can't afford. So some people have no problem waiting this out financially. Some people have a huge burden waiting this out. Not everybody knows that they can hedge against gas prices, right? That you can actually purchase the opposing side or the same side that you're on, that prices will go up. And now you can go onto a prediction market. Kalshi's the best one. And you can put a little bit of your spare change into the fact that it is going up. And at least that little spare change that you're investing is going up with it to compensate, right? Because high tide floats all boats, and the tide right now is oil. And oil is expensive. We're going to take a quick look at the chart for that. Okay. So these are national averages. And you can see here how they project the price to end for the... Oh my goodness. Why is everything so... Okay, never mind. Hold on. Whew, excuse me. I'm like, oh no. Here we go. This is the area we're in now. The area of trade, right? These are certainties already. Almost a certainty. 8 out of 10 chance. 7 out of 10 chance. 4 out of 10 chance, right? So it seems by the end of the month we're going to end somewhere in this rough area here, nationally. Locally, and I hate to admit it, well, what am I admitting? Local gas companies tend to be a little bit on the greedy side, but they still need to offload their gas, right? So we're going to see a spike in gas prices, a spike in our local gas prices, and then a drawback on the national gas prices. But the local gas prices will most likely come down slower, because now that the national gas prices came down, they have a bigger profit margin if they just trickle down the price of local gas slower. It's just what happens, unfortunately. Not to be a Debbie Downer about it, but if you keep your eyes on this, and like right here, like if you think it's going to go up past this on a national standpoint, right? Don't be thinking this is local, okay? This is not local gas. So do your research. Know what you're trading. Or just put some pennies on this here, right? Because it's going to be above this, at least by Monday, right? So you can make a little bit of something there. Because like a lot of people, they're driving a little bit less because of the cost of gas. All right, so as we bring this episode to a close, I'd like to just talk about some of the fun stuff that happened this week. Life has been better here on the island. The recovery efforts are underway. The weather is better. The trade winds are back. The grass is green. The rivers aren't as overflowing. The community still needs some help. And we always will kokua as a community to bring each other back up. But it's painfully obvious how slow the state moves to fix this. We dealt with a storm that was a bit of an outlier, worst in a long time. But we've been getting a lot more outlier events, and it's been pointing to the fact that we are not prepared. The state of Hawaii and the administration do not get along. So we're going to end up a bit of a stalemate getting funding. From the pre-investigation damage assessments, we're looking at about $1 billion. And for anybody who can't conceptualize what $1 billion is, $1 billion in seconds, let's say. So if you were to do a second and 1 billion seconds, that would be roughly about 32 and a half years in seconds, right? I'm a little over 1 billion years old, maybe a little bit more, over 1 billion. So billion's a big number. And from what I've been reading, Hawaii cannot afford more than 10% of that cost. Are we kidding here, Ohana? Are we kidding? We cannot sustain long term if hurricane season comes up and these areas are not fixed. I would prefer to utilize a well-oiled machine to fix these things. And my best example would be Japan. Like, let's make a deal with Japan. We help their economy. They help us get back in shape somehow. Their construction teams are fast. Like, this is more of an exaggeration, but if this was Japan, the floodwaters would not have been nearly as bad, most likely, unless it was something catastrophic, of course. The floodwaters would have been cleaner, and it would have been fixed before the storm was even done. Because their society is so old, they've built on strong foundations. I'm seeing roads develop huge potholes. And then I look at underneath these roads, you got asphalt, then you got dirt, then you got red dirt, and then you got sand. Sand. We cannot build back on sand. We know that weather comes and weather goes. Weather gets worse for islands. Like if we look to the South Pacific and the atolls, or even we look north towards the older parts of the Hawaiian chain, the other 90 islands upwards, Midway Island, right? We can see how our island will turn into. So the fact that expensive housing or luxury housing is near the ocean is kind of crazy, because you're putting the most expensive asset near the most likely chance of demise. Kanaloa, the ocean, always comes for the shoreline. The islands always go back to the ocean, and the overall Hawaii economy is tourism and real estate, and both are being hit by the fact that these areas are near the ocean. So I'm hoping, hope is not an investment strategy. I'm working towards trying to get an actual meeting with our president so we can come to the table. Like, if I got to go up there my damn self, I will. I come from a family of people who are not shy of talking to the boss. Like, if we got to get the head of medicine out here, or the chief of medicine out here, to diagnose a sniffly nose, then we will. Our leaders here are having a difficult time contemplating their choice, and we don't have the luxury of time of contemplation. They need to cross the aisle, go up there, set up a meeting, and secure these aid funds. They need to be guaranteed. And then also in these funds, we need to make sure that we have enough to move the infrastructure upland, right? Away from the ocean. The ocean is coming. Like, I'm seeing aerial views of my canoe club back on Maui. I paddled for Kihei Canoe Club. I remember what the beach used to look like. And then I look at the beach from the sky and I'm like, where did it go? Right? Back to the ocean. It always goes back. There's not really a way to fix it. We just gotta adapt and move upwards. Like, you can call it whatever you want. Climates do change. I don't think we're escalating it. Humans haven't been around logically and reasonably long enough to see the big picture. We're too small and too pompous to think we can control the weather on a grand scale. We cannot prevent the oceans and the weather from changing. We gotta adapt a bit. So let's hope that moves forward for all of us, because the strain on the economy is going to be hard. I don't want us to be in a recession while the rest of the country is booming after this crunch time of a crisis. Like I said earlier, the bond markets have been flashing like just boop, 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 boop. It needs to be radically adjusted because this cannot keep going. So keep your eyes open. Sunday's going to be a big episode. What is Sunday? So I mean, we can check the markets now. We'll give a quick glance on what's going on the rest of the day. Seems we're in a calm and steady place for the moment. We'll bounce back from this. We're resilient, so I think we as a human race will be able to recoup these losses and bounce back stronger. Do your own research. Be safe. Farewell. Ahoy ho. And I'll see you on the porch. And please, don't fret. Just go touch grass. Much love. Aloha, friends.